Let's sort out the marathon digital stock situation. I'll definitely show you a fail-proof strategy for this stock. As we can see, we profit no matter which way the price goes. I'll explain a bit more about this later. Also, I'll show you the 3D volatility based on this. We'll precisely build the strategy I'll show you on the volatility. And there's the smile of historical and implied volatility. We'll also see what the market forecasts, what evaluations. The market indicates a decrease in the stock after 1 month. But we'll get back to this a bit later. Let's start from the very beginning. Over the recent period, marathon digital stocks have surged by 300%. Then we had a significant drop, then another strong growth, and we're back again to $15. I remind you that this company is involved in cryptocurrency mining, specifically Bitcoins. If we overlay the Bitcoin chart on this stock, we see it until 2024 correlation almost 100%. That means when Bitcoin rises, the stocks also rise. And that's completely normal because as cryptocurrencies, particularly Bitcoin, rise, the company's revenues rise too. We can also see that at the moment, Bitcoin mining revenues are at their historical highs, very significant highs. The correlation is partly due to the rise in cryptocurrencies. However, this company is far from its historical highs. Let's immediately look at the volatility. What's been happening with volatility recently? It's currently at 110%. This will help us further formulate the strategy. Let's look at the volatility smile. We see that the nearer strikes, the nearer expiration dates are more volatile. That is, they increase both towards the call side and towards the put side. But for longer expiration dates, as we see, it's just a straight line. They don't increase towards either the call side or the put side. Traders are more inclined to believe that in the short term, the chance of price movement is higher than in the long term. We can play on this as well. Let's look at historical and implied volatility. We see that the white line is implied volatility, meaning the volatility at this moment, while the black line is historical volatility. Implied volatility is currently below its historical levels. This means that this volatility may return to its historical levels. I've always said you can focus not on trading the stocks themselves, but on their volatility. So it's much easier for us to predict volatility than stock movement. Why is it easier to predict volatility? Because volatility always reverts to its historical values. And from this, it follows that it can increase. How can we capitalize on this? We can only do this through options. Let me show you what artificial intelligence suggests we do with this. We specify the volatility, that the volatility will increase by 20%, and immediately several strategies are automatically suggested to us. We can see that some strategies have a probability of profit of 62%, some with 70%, but let's look at one. We're suggested to sell one put option with a strike of 18 and buy two put options with a strike of 15 for May expiration. In fact, there are many more strategies here of varying complexities, but I've devised my own strategy to capitalize on this because I always trust my instincts, because I like to see what artificial intelligence suggests, but still, my own knowledge is much more valuable, and I prefer my own strategies to operating on someone else's. And I always advise you to do the same when you learn to do this yourself. I'd like to show you the options trading volume. As we can see, we have a very large volume concentrated at the $16 level. Similarly, $15. That's regarding the call option. Let's look at the put option. There's a very large volume at $15 and $14. Someone might ask why we're focusing on $15 as we see here. The answer is obvious. There's a huge wall of volume here. It's at $16, $15, and $14. Of course, overcoming this wall is very difficult for us. And if we break through it, whether upwards or downwards, sharp movement may begin in the coming days. We should always pay attention to these large volumes on the options. They will hint to us where it might end up, where it might stop. What will happen with the stock in the near future? Let's immediately look at the market forecast, what it shows us. As we can see, the highest probability is for the price to be between $12 and $13. This is a 13% probability, as well as a 13% probability of the price being between $13 and $14. So the market itself tells us that the price is very likely to be between $12 and $14. The cumulative probability is almost 30%. And as we see, the probability of the price being between $14 and $15 decreases to 10%, and the probability of it being between $15 and $16 decreases to 7%. So the market relies more on a decline in this stock than on growth. Again, the market considers many factors here. Again, my friends, I agree that the market can still surprise us without these things. But the most important thing here is to understand the essence and not to argue with the market. I remind everyone of my philosophy that I don't know where the stock will go. I can't predict price movements. Anyone who tells you they know where a stock is going is deceiving you. I tend towards prudent position management to construct a portfolio so that we profit regardless. I'm also vehemently against arguing with the market. Again, someone might say the price will be $30, $40, $60 in a month, but the market tells us otherwise. And again, why argue with it? If you want to make money, you need to be in sync with the market. If you align with the market, then you'll profit. But this is certainly regarding short-term perspective. If you're a long-term investor believing in a stock for decades, then of course it doesn't matter where the stock will be in a month, whether it's at $14 or $13 or $13. It doesn't matter because you're expecting $100, for instance. Sure, if that's the case, it's a completely different situation. Then you can disregard the market, the volatility. Then you just need to buy those stocks and forget about them. So what I can say is that in 2 weeks on May 8th, we'll have a report. Until then, I can assume the stock may start consolidating at this level. That is, it may drop, for example, to $13, dollars then rise to $16 again, and so on. And after the report, the price may move either up or down. Again, no one knows that. Now let me show you the strategy I've developed. As we can see, if the stock starts to rise sharply, we make money. And if the stock starts to fall sharply, we also make money. The strategy is built on options. But again, I by no means recommend opening it. Why? Because it needs to be managed at some point, buying additional shares, buying additional options, selling on different expiration dates. I was just showing you how I work. So I construct positions, build portfolios in such a way as to profit from any price movement. I always tell you about this and say that, friends, if you learn to set up and manage your portfolio properly, you'll make money much more often. That's the secret of success. Also, again, I'm not in favor of trading actively. I know many traders work based on technical analysis. Some buy based on fundamental analysis, but I have a completely different approach. I work according to probability theory and expected value. That is, I build positions so that the risk to reward ratio is on my side. If that's the case, then in the long run, you'll make money. Of course, undoubtedly, the stock also depends on Bitcoin. As we can see, if Bitcoin is currently near its historical highs, yes, we were at $70,000 at the moment, slightly corrected. But again, in a couple of days, we can easily return to the upward trend. Marathon Digital is not at its historical highs, but even very low. And the question is, there are two possibilities here. Either the price hasn't factored in the value of Bitcoin yet. That is, it will still rise to the level of Bitcoin, which of course I don't believe in. On the other hand, it has already factored in both the price and the value of Bitcoin. And this is certainly the more likely scenario. And this is a bad scenario because if Bitcoin and other cryptocurrencies start to correct, then of course Marathon Digital will also start to correct, further dropping and even possibly costing $7 or even lower. Here, of course, the danger is very high. Again, regarding Bitcoin, predicting price movements is very difficult. In the near future, of course, I wouldn't expect $100,000, but after some correction, it might be worth looking at. Maybe closer to the end of July, after some consolidation, correction, purely in theory, we might tentatively try to rise above $80,000, but $100,000 is difficult to say. We might go up, we might not. Well, of course, the Marathon Digital event will strongly support this, but I wouldn't advise you to bet heavily on it. Also, a month ago, I conducted a poll on what would happen to this stock in a month. Let's look at the results. Mostly, everyone leaned towards growth, but as we see, those who leaned towards $10 were right. I also launched a new poll. Be sure to vote, let's see. And we'll sum up the results in a month to see who was right. Also, I remind you that when I'm pleased with the monetization on YouTube, I will open a new account absolutely from scratch. We'll be forming a portfolio absolutely from scratch. I'll show you how I do it, which stocks I specifically buy, and how I manage them. Everything will be as transparent as possible. Everything will be fully disclosed. Additionally, apart from that, I'll explain in maximum detail why I bought it, discuss so to speak. I can't wait to get started on this project. So subscribe to not miss the beginning of this experiment. Also, I advise you to watch the previous stock analysis in the previous video where I also explained in great detail where the price could go, what could happen with it. I also talked about an interesting strategy. Wishing everyone good luck.